everyone. Thank you for joining us today for HCL Technologies Q3 FY'21 press conference. We hope that you and your families are safe and in good health. I'm Neha Anand and I would be your host for today. Before we begin the conference, I would like to share some key instructions with you all. During today's conference, all attendees would be on listen-only mode. For best results, please select the focus and the full screen mode on the top right of your screens. There will be a Q&A session at the end of the conference. In case you drop out, please rejoin us using the same invite link. If you experience any technical difficulties, you can message us using the Q&A panel. Today, we have with us HCL Technologies President and Chief Executive Officer, Mr. C. Vijayakumar, Chief Financial Officer, Mr. Prateek Agarwal, and Chief Human Resources Officer, Mr. Apparao Vivi. I would now like to hand over to Mr. C. Vijayakumar. CVK, over to you.
Thank you, Neha. Good morning, everyone. I hope the new year has got off to a great start for all of you, and all of you are doing well. For HCLites around the world, this year begins with a landmark achievement. We celebrate crossing $10 billion in revenue in the calendar year 2020. This milestone, like all others in the past, is thanks to the commitment and dedication of our employees and confidence and trust our clients place in us every day. I want to take a moment to thank all our employees, clients, partners for their continued invaluable support and contributions. With that piece of good news, let me segue into the quarterly performance. The calendar year 2021 has started on a very strong financial note. Our strategic bets continue to deliver outstanding results as reflected in our sequential revenue growth of 3.5% in constant currency and a 4.4% in US dollars. On a year-on-year basis, we delivered 1.1% constant currency revenue growth and a 2.9% dollar revenue growth. In INR, our revenue for the quarter is at 19,302 crores, which is 3.8% quarter-on-quarter growth and a 6.4% year-on-year growth. Our EBIT margin saw a 130 basis points increase sequentially, coming in at a robust 22.9%, which is higher than the higher end of our guidance, and this is at a 24-quarter high. Our net income for the quarter came in at 3,982 crores, which is a 26.7% increase sequentially and a 31.1% increase on a year-on-year basis. High net income is also due to lower tax expense, primarily due to reversal of tax provisions related to prior years, and a couple of technical points which Prateek will explain in a subsequent commentary. Our attrition is at an all-time low. Our LTM basis, it stands at 10.2%, though we expect it to inch up a little bit in the coming quarters. We signed 13 transformational deals, details of which you can read in our investor release. This time we have classified $25 million and above services deals as the transformation deals. This booking is 13% higher than the December quarter in 2019. We also continue to see a strong pipeline. We are very confident of even further acceleration of bookings in the coming quarters. Our Mode 2 and Mode 3 businesses did a lot of heavy lifting in the last quarter. As you would see in the numbers, our Mode 2 revenues delivered a robust 10.9% sequential growth and a 25% year-on-year growth in constant currency. The robust performance in Mode 2 is driven by digital cloud businesses, and this reflects some of the investments that we've made, the relevance and the completeness of our enterprise digital transformation propositions, is really has proven its mettle this quarter, and it is a truly differentiating aspect of our overall service offering. The second highlight of the quarter is the products and platform business. This is again a strategic bet that we made over the last few years, and it's very heartening to see this business growing 8.3% sequentially in constant currency and 9.3% year on year on again on a constant currency basis. This, as you would see, is a very strong growth. This continues to reinforce our products and platform strategy. It's based on a sound business model and backed by relentless execution of what we signed up to. The last two quarters, which is Q2 and Q3, which constitutes the first two comparison quarters since the close of the large IBM divestiture, the 6 month year on year growth rate is 13.4%. While it is early days, this is the fastest growing business year on year perspective for HCL and probably in the industry as well. The strength of Q3 in the products and platform segment was driven by a huge increase in new license sales. In fact, our new license booking went up in triple digit YOY growth in this quarter. It's due to many multi-million dollar new license deals across many products and geographies and growth from both existing and new customers. We won 700 plus new customer footprints during this time, where a customer purchased or deployed a new product for the first time. So this performance in products and platform is a great validation of the strategy that we are pursuing on the IP and products and platform side. And we continue to see this as a strategic differentiator for us. Our IT and business services delivered 2.7% quarter on quarter, and the engineering and R&D services delivered 2.5% QOQ on constant currency terms, continuing to reflect our leadership in these segments. Just providing a little bit more color on the geographies and verticals, our geographic performance was led by Europe at 6.3% quarter on quarter in constant currency. We continue to see robust growth in different parts of Europe, especially in continental Europe, led by digital foundation and products and platform segments. US continues to be a strong market for us. We delivered a 3.2% growth in constant currency in the last quarter. In terms of verticals, 5 of the 7 verticals showed good positive growth momentum. It was led by media and telecom, which posted a double-digit growth. This can be attributed to the new ramp-ups as the market slowly stabilizes post the COVID upheaval. The financial services, though the numbers reported looks flattish, the underlying performance is very strong. Some of the FS clients in the PNP segment was sold by our teams, but fulfillment happened through business partners who get classified under the tech services segment. Overall, looking ahead, a combination of a strong pipeline, good order booking gives us a lot of optimism about the growth trajectory. I strongly believe that we are uniquely differentiated through our combination of solutions and services and our strong client relationships, our digital thought leadership, and most importantly, the entrepreneurial spirit. That really summarizes this quarter, and I will hand this over to Prateek to provide more financial commentary on our performance. Over to you, Prateek.
Thank you, CVK. To give you some additional data points on the financials, I will of course start with the very first and the most important milestone, which it feels very good, is to cross the $10 billion revenue in the last 12 months. In the calendar year 2020, we have delivered 3.6% growth year on year, both in US dollar terms as well as in constant currency. And for the same calendar year 20, last 12 months, we delivered EBITDA as per IFRS, as per Ind AS, at 27.4%, and net income at 13,202 crores, which was 17.8% of the $10 billion mark. Moving on to the quarter revenue was at $2.6 billion, 2617 to be precise. That's a growth of 4.4% on a sequential basis and 2.9% year on year in dollar terms. Noteworthy that IT and business services as well as the P&P segment are both now above the pre-COVID peak, and at a total company level, we are above the pre-COVID peak, growing at 1.1% in constant currency on a year-on-year basis. Q3 EBITDA is at a high 29.1%, again as per Ind AS, and EBIT at 22.9%. And the profit after tax is close to 4,000 rupees for the quarter, 3,982 crores to be precise. That translates to about $540 million, which is at 20.6% for the as a percentage of revenue for the quarter. The cash flow continues to be a very solid performance metric for HCL. For the quarter, operating cash flow was at $684 million, and free cash flow at $621 million. So for the last 4 quarters, last 12 months, or calendar year 20, the OCF, operating cash flow, is at $2.7 billion and free cash flow at $2.4 billion. So that is pretty much the numbers we achieved in the last quarter, and we are sustaining and driving those cash flows sustainably. Net cash at the end of the quarter is now at $2.2 billion, which is doubled on a year-on-year basis after paying for half the amount of the acquisition during the last 12 months. And on a quarter-on-quarter basis also, it has increased by $375 million. We were at 1.83 in the previous quarter. Now we are at 2.2 billion. The last 12 months earnings per share translates to rupees 48.7, which is up by about 26-27% year on year. And the cash EPS, which reflects more the cash profits of the company, is now for the last 12 months at 62.2 rupees, which is up by about 28% year on year. The company declared dividends of rupees 4 per share for the quarter, and the guidance for the next quarter is 2 to 3% in constant currency, and for the which includes the contribution from the DWS acquisition, which was closed in the first week of January. And EBIT expected for the year FY'21 is now increased to 21 to a range of 21 to 21.5%, which is gone up from the range we had previously announced of 20 to 21%. The cash flows that I talked about have been enabled and sustained by DSO, which is at 61 days, one of the lowest amongst our peers. The tax expense is one of the factors which has driven the net income higher, the profit after tax higher in this quarter. It is basically because of couple of factors. One, because it is lower due to a reversal of a provision for uncertain tax position that was set up in the prior years based on certain judicial rulings. That provision has now been reversed because it is confirmed now at a high court level. And second one is the also a technical measurement mechanism. The reduction in the tax liability is also due to change in the method of calculating the tax exemption and tax deduction that we are eligible for. So that is what is driving the extra on the net income basis. With that, I'll like to hand over to APA, our CHRO, for some HR metrics.
Thank you, Prateek. Good morning and wish you all a happy new year and a safe new year. Thanks to all our employees who continue to deliver good performance consistently over the last few years. And it's only appropriate that we talk about their well-being first. And given the pandemic, we are all in the midst of, and I'm glad to inform that all our employees and their families, they continue to be safe, and our active cases are very few with practically no critical cases. We continue our broad, vigorous, and proactive efforts to safeguard our employees and minimize the impact to our clients. Some of the important updates related to COVID are that we have amplified our internal communication strategy to create more employee awareness. Extensive employee outreach programs we have launched to track the status of our employees' health on a weekly basis. These are in addition to the 24/7 global medical helpline, which we apprised all of you a few quarters back, and the dedicated microsite that we created, and in-house healthcare centers, what we have for the past few years, and our association with hospitals and medical care in India and outside India. And we also have periodically testing our employees who are coming to offices free of charge to our employees. And there are facilities created for their not only medical care, but also for mental health counseling to employees and their families. And we are also trying to keep our campuses safe. And as part of that, we are one of the very few companies which got certified with Protech, which is a subsidiary of the Intertech, the global company. This is predominantly on in the areas of training, inspection, verification, and audits, and basically for prevention of spread of infection. One of our larger campuses is already certified, and two more are underway. So in the next quarter, we plan to certify all our facilities so that our facilities are free from any spread of infection for employees coming to offices. With that, I'll quickly update you on the hiring metrics. As CVK briefly mentioned, we added a net headcount of 6,597 this quarter. With that, our gross headcount has moved to FTE headcount 1,59,682. Our localization in US has gone up by almost 300 basis points. We are 69.8% now. Though there was a bit of a difficulty in hiring freshers during Q1 and Q2 because of the pandemic, we accelerated our fresher hiring, and in this quarter, in the O&D quarter, we added 4,022 freshers, which has brought our onboarding of freshers to 6,480 by December. And we plan to add another 5,000 in the coming 3 months in JFM quarter. And we significantly ramped up or increased our training during this period. And in fact, our training hours, which used to be a shade above 1 million, 1.13 million precisely in the last quarter, has increased to 2.05 million. It's almost an increase of 81%. And this has resulted in our internal fulfillment increasing by almost 10%. We were at 51% in JAS quarter, and our internal fulfillment moved to 60%. And that is one of the reasons which has helped our growth also. And our attrition is, as again Sivika mentioned, is at an all-time low, which is at the LTM is at 10.2%. We do expect this to go a little as the pandemic eases, and the demand, there is pent-up demand in the market for these skills. So that's where we are. Our gender diversity started improving again. Now we are 27%, which is an improvement of around 33 basis points compared to last quarter. And last but not least, the return to office statistics in India, we are at 7%, 6.9% to be precise, in the month of December. And APMEA is highest at 22.5%, and Europe again is at 7%, and Americas we are at 4%. So we are seeing increasing numbers. Our employees are coming to offices. We have been working, some of us, for the past 7-8 months. So with this, I will hand it over to Neha for Q&A session.
Thank you, Appa. We will now be opening the floor for question and answers. I would request Suraj from the HCL Technologies team to please moderate the Q&A. Suraj, over to you.
Thank you, Neha. Good morning, good afternoon, good evening, ladies and gentlemen. In case you are on your computer system and want to ask a question, please click on the raise hand icon on the bottom right of the participant panel, and we will unmute your line. If you've joined us from the WebEx mobile app, please tap on the person icon on the top right, and then tap on the raise hand icon on the bottom of the screen. And in case you have joined on audio only, please press *3 to raise your hand. Our first question is from the line of Mr. Sriram. Mr. Sriram from Manigan, please go ahead.
Hello.
We can hear you, sir. Please go ahead with your question.
Oh, great. Yeah, thank you. Good morning, everyone. I have 3 questions. First one is on the products and platforms business. We have seen quite a traction in the last 6 months, as CVK is pointing out. Just trying to understand, does it have any seasonality? One, then is the current pandemic and the digitization wave, is it giving any kind of fillip to the products and platforms service business? I'm just trying to understand if the current trends are having any positive impact on the segment.
Yeah, Sriram, thank you for the question. Yes, products and platform, you rightly pointed out, has seen a very good momentum in the last 2 quarters. This is really an outcome of our strategy. We invested significantly into building IP portfolio. Not only just investing in IP portfolio, but we have very closely understood each of our client requirements through user groups and innovated on the products. A number of new launches that have happened in the last 18 months. And all of this is very, very relevant for running a lot of mission critical operations for our clients. Be it the e-commerce platform, which a number of our clients are running. A lot of their revenue goes through this e-commerce platform. Or the security Big Fix product, which is very instrumental in the endpoint security. Our application scanning, which is in the DevSecOps lifecycle, or Unica for marketing automation. All of this is relevant in the digital transformation journeys for our clients, whether it is omni-channel commerce or marketing or security. Each of these products are very relevant. And this quarter, of course, was one of the strongest quarters. As I said, our booking in the products and platform for new license grew in triple digits compared to the same quarter last year. So I think we are seeing very good trend, very good year-on-year trends for the last 6 months. But there is some seasonality in the business, and we are only 2 quarters after we completed 1 year. So we really have only 2 quarter trends. While we feel very strongly and very positive about all the momentum that we are seeing, we would be a little cautious about extrapolating the trends. And we will continue to give you all the right metrics for you to really understand how we are progressing in this business.
Thank you. I have another question on the engineering and R&D services. From the numbers you shared, that's one segment which is slow to revive. So just trying to understand how is the environment and what are your discussions with your clients indicating?
Yeah. So Sriram, engineering and R&D segment has grown 2.5% on a sequential basis. Of course, it is still not come to the pre-pandemic levels. As I'd explained in the past, our engineering and R&D services has two broad segments. One is the asset-light industries like technology, communications, and things like that. And the second segment is asset-heavy industries, which is aero, auto, industrial manufacturing, office automation. Some of these industries are a little bit slow to pick up as they kind of remodel their businesses and the demand and supply patterns post the pandemic. So I think it's going to take maybe another quarter or two before some of these industries come back to the pre-pandemic levels. But the rest of the business in the engineering side is very strong. In fact, we concluded several transformational deals in the engineering and R&D services in the past quarter, and the current pipeline is very promising for all services, and especially so for engineering and R&D services. So overall, we feel very confident of our outlook in the coming quarters for the engineering and R&D services business.
Yes. Lastly, one question on the profitability. Obviously, we have seen quite an improvement in the profit margins, and they underscore the cost rationalization measures that you have undertaken in the last 5-6 months. Just trying to understand, CVK, so now that demand is coming back strongly, so we may see a step up in hiring and the travel cost may also return. So what are the kind of profit margin band you are looking at in the coming year?
I think it's a little early to comment on the next year. I think we have done very well, and we've given a guidance for the next quarter, which is indirectly the guidance that we've given for this full fiscal. So it's a little early to comment on the next year. I think some of the travel costs will definitely come back as some of the operations come back into travel mode. But there are also some positive things. There is offshore concentration is increasing. If you look at the total headcount that was added in the last quarter, 90% of the headcount was net increase was offshore, and only 10% was onshore. So that's going to create some positive impact. But again, there is so much of opportunities in this market. You need to balance your cost measures with your investment measures, and this is the time to really invest in new propositions on the digital transformation, invest with customers, invest in new geographies. So we believe in our earlier range of 20 to 21, it would be the most harmonious balance between all the different stakeholders, including our clients, employees, and all stakeholders. I would leave it there at this time.
Thank you, sir. Thank you very much for the time.
Thank you, Sriram. May I please request that questions be restricted to one, as we have a restriction on time. We will take care of any follow-up questions on an email later. The next question is from the line from Ms. Rukmani from Business Today. Ms. Rukmani, please go ahead.
Morning. Very happy New Year to you all. CVK, just want to understand from you, can you give us some bit of sense around the quality of deals that you're signing, in terms of tenure and also the pricing of these new deals and the margins that they come up with? And also one more, around, we're seeing second wave, the virus actually mutated itself in different forms in various countries. Though the vaccine is going to be out and we're seeing already rollouts in many nations, how, in terms of business confidence and how things are going to shape up and return to normalcy, what is your own sense? Thank you.
Yeah, Rukmani, Happy New Year. And if I were to break your question into a few parts, I think a lot of industries have kind of readjusted their operating models to operate in a sustainable manner in the COVID environment. Whether they pivoted to more digital channels or they've done whatever reformatting of their businesses to continue to operate in this environment where your movements are restricted. And they also recognize that technology is the biggest driver which will help them to not only survive the pandemic but thrive and grow in the pandemic environment and afterwards. So the lot of emphasis is there on the tech spending, and you are seeing that in the all-round momentum in the industry, and all the analyst community, all the communication is around the growth. So we feel positive about it. The deals, there are two different types of deals. One is driven around bringing in more efficiencies, lean, automation, right shoring, and those kind of opportunities, which could also include some amount of vendor consolidation kind of opportunities. The second set of deals is the digital transformation opportunities, where we are very intensely involved in let's say supply chain transformation or customer experience transformation, whether it is B2B, B2C, B2B2C kind of businesses, and things like omni-channel commerce and e-commerce transformation, inducing more AI and machine learning into some of the business processes. That's what we are seeing, and these deals are not only one-time projects, but a lot of customers are modifying their development life cycles to be a more product-centric development life cycles. So they are long-term projects which are changing the operating model and how the customers are looking at their what we call as their overall the application development life cycle and the value chain transformation. That's where most of the programs are around. And I think a lot of these are long-term initiatives for our clients, both existing clients and the new clients. I hope that helped give you a little bit flavor of the different types of opportunities.
Sure. Thank you.
Thank you. Thank you. Our next question is from the line of Mr. Kushal Gupta from Z Business. Mr. Kushal, please go ahead.
Hello. Yes, sir. So I have a few questions. First of all, with regards to the pricing. So currently, like as we're seeing, a lot of companies are going for digital transformation, and there would be new set of clients who would be approaching a company, an IT giant like HCL Tech. So in that scenario, like, is there a price differential with regards to the new clients, and comparatively, how is the overall pricing scenario pacing out for the IT industry, specifically the digital contracts front? That is one. Secondly, on the hybrid model front, like more than 95% of employees are still working from home. So going forward, what is is the exact or maybe a ballpark figure with regards to how much of employees of the total employee base would be working from home, maybe in rotation? And thirdly, in the briefing, it was mentioned that there was localization aspect going up. So I just wanted a clarity on the visa issue aspect. If it crops up in future, and there would not be any problem that's what I thought to ask. So this was my third point.
Maybe I will request Pradeep to respond on pricing, followed by Appa on the operating model and the localization questions. Pratik?
Yeah, thank you, CVK. Kushal, I think pricing continues to be, competitive. That's what we have seen for the longest time, and this period is no different in that sense. Of course, given the demand is, pretty high at this point in time, it does give us a good opportunity to close deals faster. As far as digital is concerned, digital continues to make more at a gross margin level for us as a company, and higher than the mode one pricing, for example. Uh, Digital is combined in with cloud and everything in mode two, as you know. Uh, Over to Appa for the work from home, etc.
Yeah, thanks, Pratik. See, as far as localization is concerned, this is nothing new for HCL. We have been increasing our localization in respective geographies over the last 5 6 years, and we are not really so much dependent on landed people in different geographies. So we have been hovering around 70%, or take a couple of percentage in the US, and we are at around 80% in other geographies in terms of localization. So that's a strategy we will continue both from supply chain perspective and diversity in talent perspective. And coming to return to office, we do believe that there are certain roles which need to work from office, which are dependent on laboratories, especially in engineering and R&D services, or where data protection mandates people to work from secured locations. So those are the roles which we have identified, and rest of the people also we believe the innovation comes through a process of people interacting with each other. So a little bit of rotation through offices is something what we believe is required for an organization like us. Though work from home is here to stay, the percentages will depend on business requirement and customers' demands. Is what we believe going forward.
Thank you.
Thank you.
The next question is from Supriya Roy from Tech Circle. Ms. Supriya, please go ahead.
Hi everyone. I hope the new year started on a favorable note on everyone's end. My questions were two. The first bit was already well answered by CVK about the factors that are dependent on the growth of engineering and R&D lines. But on that same line, I'm trying to figure out if HCL has a strategy change owing to COVID-19. I'm wondering if there are new opportunities that's getting converted to its existing businesses. We also see this, and if the same is going to be reflecting in the order books anytime soon. And I want to know if there are these new initiatives about setting up global delivery centers in the APAC region, with Vietnam government saying that HCL will contribute to 8,000 jobs in the country. So with all this in picture, I want to know if there's a strategy change owing to the year that has been at 2020. And in this, my second question, I want to know how every time that a contract comes in at HCL, how does the company differentiate what goes into mode one, what goes into mode two, and what goes into mode three? Because it's usually a technology suite of services that come into one deal. These will be all my questions. Thank you.
Sure. So from a company strategy perspective, if you have been following us, we have invested significantly in mode one around automation, efficiency, and lean, and really making the enterprise highly efficient. And in mode two, we focused on investing in all the new technologies which are really instrumental or the underlying pieces for the digital transformation of our clients. And mode three is the products and platform. So this investments have been happening over the last several years, and pandemic has only accelerated the need for these services, and the demand for these services has only catapulted due to all the new requirements that are pretty much becoming mandatory in the COVID world. So I would say there isn't a change in strategy, but it is really strengthening or really accelerating the strategy that we already had. In terms of delivery locations, we constantly look at the locations which are best suited for scaling. And like a few quarters back, we had announced Sri Lanka as a delivery center where we are scaling up. And in the last quarter, we announced Vietnam. We have big plans for Vietnam. We believe it can be a solid base for our engineering services in the long run. I don't want to comment on the headcount, but it's still very early days. We are very keen to expand in Vietnam. And mode 1, 2, 3 classification is very clear. Some of the traditional work which is happening, whether it is on the infrastructure management, application management, some of the traditional engineering work in asset heavy industries, they are classified under mode 1. All the new transformation deals around digital technologies is mode 2, and the software products is mode 3. So that's how we classify this.
Hi, just a quick follow-up question on a sectoral basis of the revenues coming in. I want to know, of course, HCL's always had a stronghold on the health and life sciences sector, but is there any ad hoc growth in this particular quarter in sectors such as those, given the seasonality?
No, see, there are certain segments of life sciences and healthcare which has seasonality, but we are very strongly present in the pharmaceutical industry, where we have won several deals in the last 9 months. We're also present in the service provider segment, which is predominantly some of the largest hospitals in the US and in other parts of the world. So that's why you see the life sciences business has grown 13% year on year. So I would not attribute it to any seasonality, but our overall strong all-round presence in different segments, payers, providers, and the pharma companies and medical device companies is what is contributing to this very strong year-on-year growth.
Thank you. Thank you, CVK. Due to restriction on time, we will just be taking 2 more questions. Our next question is from the line of Ms. Jushel from ET Prime. Ms. Jushel, please go ahead.
Hello, sir. Thank you for taking my question. I just have one. As we've seen that attrition is low, utilization is high, and demand is increasing, are you concerned about supply side constraints? And if yes, are you taking steps to mitigate them in the future?
Maybe Appa is the right person to answer this question.
Yeah, absolutely. Yeah. We are taking steps in terms of ramping up our headcounts. Yes, today the utilization levels are very high and attrition is low, but going forward, we do expect an uptick in attrition. So hence we are shoring up our recruitment strength. And today, if you see, all our recruitment is virtual. We have digitalized the whole recruitment process. So we are ramping up. We do expect a pent-up demand in the coming quarters.
Thank you. Our next question is from the line of Ms. Swati Murthy. Ms. Swati, please go ahead.
Hello, sir. I just have one question. It's about the outlook. I mean, how is the decision making? Has it gotten better compared to the last 2 quarters? And also on the client budget cycle. So, if you can give your outlook on what are the budgets like and where, what kind of demand is there, that would be great. Thank you.
See, the overall demand environment is very strong, as I called out in my commentary as well, for both types of deals, cost optimization and right shoring, automation, efficiency-led deals is one big trajectory of big opportunities. Then the second set of opportunities are around digital engineering and digital transformation kind of opportunities. So we see traction in both. Specifically commenting on the client budgets, uh, all the analyst reports and surveys seems to indicate that it will be stable or growing. But for us to kind of make an estimate, it's still very early in the year. So I would not be able to comment on it at this time.
So decision-making cycle, has that gotten better? Because when the pandemic had started, decision-making cycles were longer, at least for the large deals. Has that gotten better?
Yes, I think that was particularly true in the April, May, June quarter. A lot of things were in a hold pattern or there were delays. And in July, it had really opened up, and the deal making, all of that is happening in a completely virtual mode. Uh, I think it's normal decision cycles. But of course, customers are looking at many of these initiatives a lot more intensely, and much more strategic importance is being attached to some of these initiatives. To that extent, I would say there is a little bit of acceleration in the decision making on several fronts.
And this is one follow-up. So you did mention this during your commentary on BFSI. Both of your peers, the larger peers, have reported robust results in BFSI in almost double-digit growth in some cases. So, but your BFSI has declined. Could you comment on that? You did mention that it has though the result does not show it, there is an increase. But if you can comment on that,
Yeah, I think, the underlying trend in BFSI is very strong. I think one way to look at it will be to combine BFSI and tech and services vertical and look at the growth. Because a lot of product business to some of the financial services customers, while we are directly engaged with customers in solutioning and selling, the fulfillment happens through business partners in certain geographies. So I think that gets classified under technology and services vertical. So if you take out and really look at the underlying performance, I think 2.5% growth is what is really quarter on quarter growth is what's happening in the FS, and the pipeline, and a lot of our banking customers are scaling up their programs, and we are participating quite aggressively in many of those programs. So I think it's quite positive, and we feel pretty confident about ongoing momentum in the financial services.
thank you, sir.
Thank you. Unfortunately, due to the constraint on time, we will have to call a closure to the press conference. If you have any more questions, you can send them us on email and we will revert to you. Thank you, and back to you, Neha.
Thank you, Suraj, and thank you everyone for your valuable time and presence today. Please note the recording of this webcast would be available on the HCL Technologies website. With that, we close the press conference today. Thank you once again. Take care and stay safe.